Hey, this is Mark from Caliber Home Loans. It is Friday the 10th. It looks like late fall blew in from the north late yesterday and is still with us. A little surprised to wake up and see snow on the ground this morning. Not that there was a lot, but still a little surprising. So let's take a look at the markets real quick. So the graph you're looking at is from yesterday, since the markets are closed today for Good Friday. So you'll notice that it was pretty shaky. I mean, the trend is certainly up until about noon, and then the pricing started to drop off, which pushes yields up a little bit. And then the straight line, the market's closed at 2. So this point right here is at 2 o'clock. So it's basically a straight line. I don't know why it would edge up at the end of the day. I can't really explain that. So let's take a look at the last week. You'll see that it was fairly, with all the jags and jigs, it was still fairly flat until Thursday, and then the bond, looks like the Fed went in and bought a bunch of bonds, and then so the yields went up. The price went up and the yield came down a little bit on Friday or on Thursday. So the Fed is the only bond buyers right now. So to give you an idea how this works, so the end price was about 104.45. So the coupon rate on the bond is 2.5. So at that price, the yield is 2.39, and the yield to maturity, if you held it for the entire maturity of 30 years, would yield you 2.291. You can imagine that there aren't a lot of excited bond buyers that want a bond that's based on the fact that homeowners are going to pay their mortgage on time and only yield somewhere between 2.3 and 2.4. It's just not going to happen. So that's why the Fed is in there buying bonds, trying to keep rates lower. If they weren't in there buying, rates would be a lot higher than where they're at. So let's take a look at. This is a 3-week look. So you'll notice that beginning on March 9th, the Fed went in there and started buying massively, and then they kind of eased off, and it's been a fairly consistent run ever since about March 24th. So the Fed is doing their job. They're not overbuying, they're not underbuying. They found a nice niche as far as how much to spend every day and keep the rates fairly consistent. Now, that doesn't mean that the rates that the lenders are offering is based on reality, because the lenders are basing their rates on, besides the market, they have to watch the bond market, but besides what's going on in the bond market, they also have to watch the liquidity. And for the servicers, where all these people are going into forbearance, remember that a servicer, a lender, if you don't make your mortgage payment, let's say you pay Wells, if you don't make your mortgage payment to Wells still has to write a check to Fannie Mae and Freddie Mac, regardless of whether they have your check or not. So you can well imagine, with thousands and thousands and thousands of people that are now going into forbearance, the lenders are shoveling out an awful lot of money without it coming back in. So we're still waiting for the government to pony up and add some liquidity to the system on the conventional side. It's not quite so dire on the government side, because HUD and Ginnie Mae and the government lenders have kind of shored that up a little bit with the servicers. But if anyone's in distress and they don't think they can make their mortgage payment because they've been laid off, they're furloughed, or their pay's gotten cut, they need to call the company that they mailed the check to, not necessarily the loan officer, because that company might have sold the loan. So whoever they make the check out to, that's who they need to call. And just be warned that everybody and their brother and their cousin is calling all at the same time for the same reason. So hold times are long. I would also suggest that you check the website. A lot of companies are going to online applications. I know Caliber is doing that just because they got completely blown out on the phones. So they created an online application for forbearance. So just a word to the wise. If there's any questions you have about that, feel free to reach out, 248-705-8431. Other than that, rates are still low. For those that are still working, it's still a great time to refinance, get the rate down. maybe shore up some of your consumer debt. I just closed a loan last week. We saved the couple just over $700 a month. And it was astounding what the difference was. And so they're very happy, especially going into an unknown time where they may or may not have their job next week. So again, just let me know if I can help any of you or any of your clients. The guidelines are changing rapidly. So anyone who has been pre-approved should check to make sure they still are pre-approved in the same conditions. And other than that, I'm looking forward to getting back to the street and getting everybody back to where they should be, and everybody getting their jobs back and having some kind of normalcy. So if there's anything I can help anybody with, let me know. 248-705-8431. Thanks a lot. Bye-bye.